Your loan didn't change. The rules did. Your balance is unchanged, but the plan you were on was vacated, and two plans you've never heard of are the only doors left. Most people meet that with a 40-page servicer PDF. There's a simpler way. Put your real loans and your real income in one file and price every plan you qualify for by what it costs you all in, not by the monthly payment. Save was vacated, and the forbearance you were parked and stopped counting. Then the email came. 6 acronyms, a 90-day window, and no math anywhere in it. So meet the sample file that ships inside. Jordan Reyes is shipped sample data, not a customer. $68,400 across 5 loans at a 7.81% blended rate. Adjusted gross income $58,000. Household of 2, 1 dependent. One simplification. The workbook models those 5 loans as one blended loan. Real portfolios can put different loans on different plans. Chapter 1. 7 plans, 1 table, and the column that matters is the last one. RAP has the smallest monthly payment on the board, $191.67. Standard 10-year has the biggest, $822.89. Standard 10-year is done in 120 months at $98,746 all in. RAP, at that comfortable payment, runs to $143,156. RAP is $631.22 a month lighter than standard 10-year, and that breathing room costs $44,409.88 over the life of the loan. The winner on lifetime cost is the boring one, and breathing room shouldn't be an accident. Chapter 2. RAP is built differently. No poverty guideline offset, just a band rate on your total adjusted gross income. $58,000 puts Jordan in the $50,001 to $60,000 band at 5%. 5% of the whole AGI is $2,900 a year, or $241.67 a month. One dependent takes $50 off, $191.67. Because the rate hits your total income with no phase-in, the band edges are cliffs. At $60,000 of AGI, the payment is $200 a month. At $60,001, $1 extra dollar. It's $250.01, $600.12 a year for $1. Chapter 3, and it sounds impossible. Interest accrues at $444.95 a month. The payment is $191.67. That's a $253.28 shortfall, and under RAP, education weighs it instead of adding it to your balance, then matches $50 of principal. Month 1, balance $68,400, interest $444.95, payment $191.67, $253.28 waived, $50 matched. Ending balance $68,350. A payment that doesn't cover the interest still shrank the balance. Chapter 4. Payoff versus forgiveness. 3 honest paths. Ride new IBR to forgiveness. $212.83 a month. 240 payments. $90,928 paid. On paper, the cheapest thing on the board. Then the row most calculators leave out. At payment $240, $84,260 is forgiven, and forgiven balances can be treated as taxable income in the year they're forgiven. At a 22% marginal rate, the file estimates an $18,537 tax bill due in cash. So the true cost of the cheapest-looking plan isn't $90,928. It's $109,465. Chapter 5. Start here, because this is the plan you get if you do nothing. 7 plans, 1 row each. Can you use it, and when does it disappear? Because one of the 5 loans was disbursed after July 1st, tiered standard is required. $563.90 a month, 240 months, $135,334, and not one of those payments counts toward public service loan forgiveness. 22,038 formulas across 14 connected tabs. Before any of this was filmed, The workbook was recalculated clean, 0 formula errors, and passed 170 out of 170 independent math checks. Every screen in this video is that real file. This is a planning tool, not legal, tax, or financial advice. The rules changed on July 1st, 2026, and they are still evolving. Nothing here promises you'll qualify for any plan or any forgiveness. Confirm your own numbers with your servicer and at studentaid.gov. Put your loans, your income, and your household into the warm cells, and you'll have every plan you qualify for, ranked by what it truly costs, tax bill included. The Student Loan Repayment Command Center is $19.97, one-time, free lifetime updates, Excel, and Google Sheets. Know your number before your servicer tells you. The link is in the description.